Welcome to Explain the Charts, where we break down the data to help you navigate the markets. Today is March 16th, 2026, and Apple Incorporated is currently at the center of a massive tug-of-war between ecosystem strength and supply chain risk. The stock is trading around $251.58, showing a modest recovery of about 1% today after a rocky start to the month. Recent headlines have been mixed, starting with a significant profit miss from Apple's key supplier, Foxconn. Foxconn reported a 2% drop in profits, citing rising cost risks that have spooked investors across the tech sector. However, Foxconn remains optimistic about the back half of 2026, banking on heavy investment in AI servers to drive revenue. On the hardware side, Apple has been incredibly busy, launching the AirPods Max 2 and a new budget-friendly MacBook Neo. The MacBook Neo, priced at $499, is a strategic move to dominate the entry-level student market and boost volume. Regulatory pressures are also in play, as Apple recently cut its App Store fees in China from 30 to 25%. While this move aims to appease Chinese regulators, there are growing concerns about how this will impact high-margin services revenue. Furthermore, institutional sentiment has seen a shift, with Berkshire Hathaway notably reducing its holdings in the tech giant. Despite this, many analysts maintain a buy rating, pointing to a median price target of $271.68 as the long-term goal. Macro factors like retreating oil prices are providing a temporary tailwind for the broader Nasdaq, including Apple. But with the Federal Reserve meeting just days away on March 18th, investors are remaining cautious. Let's jump into the chart data to see how these fundamental catalysts are shaping the price action. Switching over to the 1-hour chart, we can see a very clear period of rejection that occurred in late February. Look at the range between February 24th and March 4th, where Apple attempted to maintain its footing above the $270 level. We saw a peak high of $280.38 on February 25th, but the momentum quickly faded as selling pressure intensified. This rejection at $275 was a critical turning point that led to the current downtrend we are observing. The candles show a series of lower highs, indicating that bulls were unable to absorb the supply coming from institutional exits. This technical weakness coincided with reports of Apple postponing its new smart home display due to AI integration challenges. By March 4th, the stock had slipped back toward $260, failing to hold the SMA 20 and SMA 50 levels. When we see the price drop below these short-term moving averages, it often signals that a deeper correction is underway. The volume during this decline was elevated, suggesting that this wasn't just a minor pullback but a concerted move by sellers. Note how the $260 level acted as a temporary floor before the next leg down initiated. This hourly view highlights just how much resistance is now stacked above the current price. To become bullish again in the short term, we would need to see a convincing close back above that $263 zone. Currently, the hourly trend remains firmly bearish, with every relief rally being met by fresh selling. Understanding this range is vital for day traders looking for entry points near support. Now, let's zoom in even further to the 15-minute data to look at the most recent price action from the last few days. On this 15-minute chart, we are looking at the intensive sell-off that took place between March 11th and March 13th. Observe the sharp drop on Friday, March 13th, where the stock plummeted over 2% to hit a low near $249.52. This intraday slide was driven by high volatility and weak momentum signals as investors weighed firm inflation data. The stock opened above $255 that day but was relentlessly sold down throughout the session. This price action reflects the AI jitters mentioned in the news, where investors are rotating out of high-valuation tech. However, notice the small bounce occurring toward the end of the data as we approach the psychological support of $250. The $250 level is a key area where buyers have stepped in previously to prevent a total breakdown. If we look closely at the transactions, there is still significant interest near these lows, suggesting a buy-the-dip mentality for some. The 15-minute candles show that the selling pressure might be exhausting itself for the moment. A stabilization here could lead to a relief rally back toward the $255 resistance zone. But keep an eye on the volume. We need to see increasing by volume to confirm a reversal is actually starting. Without significant volume, any bounce from $250 might just be a dead cat bounce before another drop. The price is currently below the SMA 20 and SMA 50 on almost every time frame, which is a major red flag. The news of the MacBook Neo launch could be the catalyst needed to spark some short-term bullishness. Let's return to the daily chart to put this all into a broader perspective for long-term investors. Back on the daily chart, we can see the full extent of the 52-week range from $169.21 to $288.62. The primary level to watch right now is $245.33, which represents the SMA 200 support line. Maintaining support at the SMA 200 is absolutely critical for the long-term bullish structure of Apple stock. If the price breaks below $245, analysts warn that a much deeper decline toward $222 could be on the horizon. Conversely, the intrinsic value of Apple's ecosystem remains strong, which provides a fundamental floor. We are currently seeing a crossover where short-term momentum is bearish, but the long-term trend is testing its limits. The Relative Strength Index, or RSI, is nearing oversold territory, which often precedes a short-term rally. Bullish traders should look for a successful retest of the $250 level followed by a breakout above $260. Bearish traders will likely wait for a failure at the SMA 200 before entering new short positions. The upcoming Fed funds target rate announcement on March 18th is the next major macro catalyst to watch. If the Fed remains restrictive, tech stocks like Apple will likely face continued valuation pressure. However, an unexpected pause or dovish tone could send Apple soaring back toward its median target of $271. The India manufacturing surge is another long-term positive, as it reduces Apple's reliance on any single region. By producing 25% of iPhones in India, Apple is successfully diversifying its supply chain risk. Despite the current volatility, the fundamentals suggest Apple is still a market leader, even if the price is cooling off. To recap the important levels, we have immediate support at $250 and major structural support at $245. Resistance is currently sitting at $260 and more significantly at the $275 peak we saw in February. For an unbiased prediction, I believe there is a 60% chance we see a consolidation between $245 and $255 over the next week. A move above $263 would significantly increase the likelihood of a return to the $280s by the end of the quarter. However, if the $245 level fails to hold on high volume, we must prepare for a bearish continuation toward $230. Look for the results of the student-focused MacBook Neo sales and any further news regarding smart glasses development. The market is sensitive right now, so monitor the broader Nasdaq trends and oil price fluctuations closely. As always, thank you for watching this analysis on Explain the Charts. Please remember that this video is for educational purposes only and does not constitute financial advice. Investing in the stock market carries risk, so always do your own research or consult with a professional before making decisions. Be sure to like and subscribe for more in-depth chart analysis and market updates.